we also have Shrikant Chouhan with us. And Shrikant, hi, good afternoon and good to be speaking with you. And firstly, what's your take on the markets and any sector that is popping up on your screen? Because, yes, of course, a lot of sector churning underway. We are seeing select life insurance counters, select PSU counters. They are doing well. What's your analysis?
Yeah, good afternoon, everyone. I think, see, like since last 3-4 days, if we consider any specific activity in any specific sector, then I think this FMCG and auto companies, they are doing well. But the broader market is not that strong. The breadth of the market is very poor. It is finding difficulties to sustain at higher levels, and whenever there is a negative news flow, we are seeing deep in the market. So I am of the view that as far as the Nifty is trading above the levels of 24,450, we can see some rebound in the market because markets are deeply oversold. But in case market breaks the level of 24,450, then in that case, we can expect some capitulation sort of activity in the market, because then a lot of selling will happen, a lot of stop losses will get triggered. And in that case, we can even see the levels of 24,150. But in the near term, till the market is holding above this 24,450, we can again see the levels of 24,800 on the higher side. So for the time being, we are expecting market to remain in a range. For Bank Nifty, there we are seeing consistent weakness. It is not holding at any important level. And even if we consider FI's activity, then they are consistently selling into the market. So that's the reason Bank Nifty is also avoidable at this level. It is down already. Close to 55,000 levels, it has very good support. But at this level, it is better to stay away from taking any specific position on Bank Nifty. Better try to focus more on Nifty 50 stocks and Nifty index.
Okay, so that's the strategy on the benchmarks. But Sharan, while we are talking about banks, the PSU bank space, and you've been positive on this space, is the only space that has been in the green in today's trading session for whatever reason on the back of policy. But on the charts, how are some of these stocks shaping up from the PSU banks, and which ones are you liking from this basket?
So, Sneha, I think Canara Bank is looking quite decent. It's seen a good reversal of the 100-day EMA. I think it's one of my picks, also a BTST pick today. So if anyone wants to go long, I think Canara Bank is a good BTST. Go long around 109 rupees. That's the price currently, with a stop loss of 106 rupees, just 3 rupees, with a target of 112 to 115. Please do not trade without a stop loss. In the next 24 hours, anything can happen. Your tariffs can go to 50%, 100%, I don't know what. So if at all, stay light. Canara Bank is looking very good from the PSU pack.
Canara Bank is looking good at this point in time. That's the call coming in from Sharan. But Deepan, maybe tomorrow when the markets open, we will have the tariff rate announcement by Donald Trump. At this point in time, Deepan, a lot of uncertainty is there. And investors are, of course, nervous regarding that. But what, as per you, will be the best strategy to adopt at this point in time? How do you rather suggest to make the sector churning, or rather make some adjustments to your portfolio? Because you were just highlighting that it's maybe a time to avoid some of those export-related plays. So if you wish to highlight some particular pockets where investors can, going ahead, look to cut the exposure.
That's what I think. As I said, FMCG is one sector where investors can look to cut exposure. And then now pharmaceuticals also, if there's an announcement of any custom duty over there, that's going to impact the demand, the pricing, because I think US consumers, US buyers will insist on part of the custom duty to be borne by the Indian companies. So that's also a bit of a challenge. I was quite disappointed with the banking sector numbers, excluding the PSU banks. So I think there are fewer and fewer sectors who are coming out as winners post this earnings season. So let's just wait and watch. I think software also was very disappointing. Large cap software companies again are in a structural slowdown mode. So it's getting quite challenging to be an investor in times like this. And the good quality companies, say the capital goods companies or the telecom companies, like we saw with Larsen and Toubro, or for that matter, Bharti Airtel, they're trading at very rich valuations. So I think time has come for investors to be extremely selective and just wait and watch. I think this Trump tariff, let it just settle down, I think, before one could look at doing a massive reshuffle of the portfolio. But by and large, I think more sectors investors need to be underweight at this point of time than maybe a few months ago.
Okay, Deepan, appreciate your thoughts. And of course, well, indeed, it's a difficult and tricky time to be an investor. And Deepan, next time when we interact, we may have a new set of tariffs. So lots to talk about next time with you as well. But thanks for your time today. Well, let's move on from that and once again to focus to the technicals and let's get some BTST ideas from our experts. And Shrikant, what about you? Where are you placing some BTST or perhaps in a market like this, some STBT ideas? Shrikant, could you unmute yourself, please?
Sure.
Thank you. Yeah.
So to act with a very short-term view, Godrej Agrovet looks good. Currently, it is around 815, 814 sort of levels. The company is going to announce its quarterly number. But if we consider its technical pattern, then it is holding comfortably above the levels of 810, which is something positive. And we can expect 835 sort of levels on the higher side. We can keep a stop loss around 804 for the same. So that one we like. We also like a few FMCG companies, but currently the market is under a lot of pressure. So it is better to create some balanced strategy and look for creating some short position on technology companies because there we are seeing good amount of hammering. HCL Tech looks weak. Currently it is around 1464, 1465. From here the stock can fall to the levels of 1420 and we can keep a stop loss at 1480 for creating any short position on HCL Technologies.
All right, so that's one buy, one sell call coming in from Shrikant. But what about you, Sharan? You gave a buy call on Canara Bank. Any other stock making to your list?
So there's one more sell call. I think Crompton Greaves is looking very weak on the charts. I think it's trading below all its moving averages. And I think it's on the verge of a big breakdown. So if at all anyone can do a STBT trade, short Crompton Greaves August future around 320. Target should be 312 to 304. Your stop loss should be 328 on the system. Again, trade light. Don't add too many position. Anything can happen in the next 24 hours. So please do keep a strict stop loss in the system.
Okay, so that's a sell call coming in on Crompton Greaves. That's the take on this stock by Sharan. But let's also welcome on board Mr. Sunil Subramaniam, who's a market expert, to get a little better idea on how should one navigate the turmoil that we're seeing in the market and the kind of uncertainty that comes almost every day with fresh set of comments coming in from Donald Trump. And Sunil sir, that's exactly my first question to you. Hi, good afternoon and welcome to the show. How does an investor or how do our viewers try and navigate the uncertainty that comes with the comments that we're seeing, and now that we're seeing an extra tariff overhang of 250% on pharma, we're also being threatened by extra tariffs on India overall as well. How do our viewers navigate these uncertainties in the market at present?
So first thing, I think as a viewer, you need to decide your own risk profile, right? What's your ability to handle the volatility, which is a given in these times, thanks to Mr. Trump's tweets and the overall uncertainty, right? So if you are a risk-taking investor, you can actually look at this and say that if we are going to be suffering a higher tariff than 25 because of the oil, and let's say it goes to 30, right? And then the second aspect of it is that pharma and all, it goes up very high over a period of time. But the key point here is that a lot of the correction is in the price, a lot. I'm not saying that it's done. There's still more correction. But the reason for the correction is because FIIs have been staying away. So I think what you need to correlate is that FIIs have been staying away from all the external oriented sectors in the economy, thanks to the Trump tariff-related uncertainty. So there's been a market price correction in those relative sectors. So pharma, IT, those kind of sectors. So now when you look at it, if you're a risk taker, you have to say that ultimately, when these tariffs happen, it's not like India is defenseless, right? Like I said, we can, first thing is use currency depreciation as a tool to counter some of the tariff. Second is you'll see government also giving a lot of productivity-related incentives to improve the productivity in order to compete. Third is we'll hunt for a larger share in other markets, like maybe EU, the rest of Asia, of that. So it's not like today there's a lot of the bad news in the price, but definitely if your risk appetite is not aggressive, you should stay away from the external oriented sectors, right? Then you obviously have to Trump proof your portfolio, and to that extent, right, you look at the domestic side, which is not so affected by the thing. And mind you, domestic fund managers last 3 months have bought 2 lakh crores worth of equities. I think average about 60 to 65,000 per month. So clearly they have been buying a lot of the stuff that the SI was selling. And so the FIIs, what they've been selling, like I said, the a passive FII will sell both your domestics as well as your externals because they are selling the index. So, and domestics have been going and buying these domestic sectors. So what's happened is that the domestic oriented sectors haven't fallen as much as the external oriented sector. So already there is an element of safety being built, and that will continue to be so because I don't see domestic fund managers taking a big risk on externals right now. They will also prefer. And so the developing earnings season is a key trigger for the fund managers. So from that point of view, if you're a moderate risk investor and you're then looking to domestic oriented, I would say consumption, banking and financial services are the spaces, and capital goods with a slightly longer attitude is the spaces you should be in. But I would still recommend that you stick with a mutual fund manager rather than try and pick stocks at this point of time, because like I said, domestic funds have been buying the good stocks and their prices are already way up. So to that extent, it's very hard for a retail investor to go and say, okay, within the domestic pack, this stock looks good or that good, because the earnings season is still underway. It's not completely done. So I would say choosing multi-cap funds and multi-asset funds, because let's bear in mind the other thing which is on the anvil is a Fed rate cut, because I think that the NFP data which has come out in the US, coupled with the fact that Mr. Trump is putting a lot of pressure to get his people into the Fed Monetary Committee, I would say the odds of a rate cut in the US have gone up. To that extent, that's a positive for equities in the emerging markets, and some amount of FI flows may start to come back. So one has to have a balanced approach here. Obviously, you don't dabble too much into the tariff impacted sectors if you don't have the appetite for the risk. So I think that's the way to look at it. But if you saw from the RBI's policy today, the economy numbers look good, inflation looks good. So overall, the prognosis for the economy is fairly decent. And RBI, despite the Trump uncertainty on the tariffs, hasn't downgraded India's growth rate yet. It's still holding it at 6.5 for the current year. So obviously they have extensive access to data. So the fact that India's exports are only 2% of our GDP, right, means that our external orientation as an economy as a whole is relatively less compared to a lot of our competitors. So I think we should stick with our domestic economy's outlook, and the RBI's rate pause. In fact, it's a good sign. They see that there is no worry in terms of trying to give an extra booster of a rate cut to boost the economy. They seem fairly confident about the economy. So stay confident about the domestic economy and put your portfolio around there if you're of a moderate risk appetite.